Now, I get that maybe not every single investor out there, not every single dividend investor is as big of a fan of SCHD as I am, and maybe everyone didn't get the opportunity to buy a ton of SCHD at the lows of $70 and below per share over the last 12 or so months. Now, I personally was buying SCHD during all the dips, during all the rips and everything in between, to the point to where as of right now, I currently own around 700 shares across all my portfolios combined. But the question remains, is SCHD or the Schwab US Dividend Equity ETF still a buying opportunity for long-term dividend growth investors? And this is in the context of where it's trading at currently in late 2024. Now in this video, we're gonna go over and I'm gonna answer exactly that. So make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, at least as of filming this video, SCHD is currently up around 11.7% over the 1 year and up almost 9% year to date, once again trading dangerously close to the 52-week range high of $84.57. Now, it's hard to believe, but not that long ago, SCHD was trading in the mid $60 range, which now is nearly $20 off of the most recent all-time high. And there was tons of dividend growth investors across the board that were buying this one like crazy at the lows, but there was also a ton of investors that were running for the hills and thought that this ETF's run was finally over for good. Now, quickly zooming out, you can basically see that every single time historically that SCHD has seen a dip, it's recovered and then some time and time again. But to be fair, ever since around 2022, this ETF has been sort of in a slump, trading mostly sideways, more or less, but still all along while paying investors more and more in dividends year after year, which is still something important. Now, to give you the quick answer, is SCHD still a buying opportunity for long-term dividend growth investors out there? In my humble opinion, I 100% think so, which is why as of right now, basically every single day, I personally am still adding more shares to my long-term portfolio, even though it's basically trading at all-time highs as we speak. Now, to frame exactly why I'm still buying shares of SCHD and why I'm so bullish on this ETF, I'm going to go over that very thoroughly, so stick around. To go back to some of the basics, the objective of this ETF is very simple, but yet very complex. The fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So this is the very important part here, especially if you're a newer investor, maybe you don't know all that much about SCHD, or of course the index that it tracks, the Dow Jones US Dividend 100 Index, which is very important, especially in constructing this ETF and understanding it. Now, to understand SCHD thoroughly, we're going to have to understand this index that SCHD tracks, which is the Dow Jones US Dividend 100 Index. And to understand this thoroughly, we're going to have to look a little bit deeper into it and understand exactly the methodology of this index and see how it works, how stocks are entered, how stocks are taken away from the underlying ETF. Because again, this is going to give you either a reason to hold onto this one, to buy this one, or maybe if you don't believe in it, if it's not matching what you're looking for, it could be a good reason to stay away. But to dig a little bit deeper into the underlying index that SCHD tracks, this is going to be very, very important. Like I said, for your reason to actually buy this one or maybe not. Again, depending on what you're looking for, what you're solving for, and what you believe in. Now, just to give you my opinion before we go into this index, I'm a huge fan of this underlying methodology. I think this is more or less a bulletproof screening process, which is why I'm so bullish on SCHD long term, because no matter what happens today, as long as this ETF keeps basically using this methodology, I think that over time, the best stocks are going to remain inside the index, and stocks that don't perform or don't match what these screenings are going to be taken out, which again is why long term, even at the level that this ETF is trading at, I still think it's a buying opportunity for long-term investors. But to give you an idea of how this index works, the index universe is defined as the constituents of the Dow Jones Global X US Large Cap and Dow Jones Global X US Mid Cap. REITs are excluded from the universe. For China, only stocks of companies that trade on developed market exchanges are eligible. Now listen closely, because this is going to be how stocks are entered into the index or not. Stocks must pass the following screens. Number one, a minimum of 10 consecutive years of dividend payments. Now, if you're a dividend growth investor, this is going to be a very important metric. But like I always say, not just one metric is important. I always say that you need to look at a handful or more of metrics to make a decision. So first off, 10 years of consecutive dividend payments. This sort of gives you an idea of what a stock has done historically and if a stock's dividend is going to be safe or not. Also next, minimum FMC of US 500 million, current constituent US 400 million. So that gives you a size idea. Minimum 6-month MDVT of US 2 million. Now, also important, non-constituents must be domiciled in a country whose universe weight is greater or equal to 0.2%. Current index constituents are eligible if they are domiciled in a country whose universe weights greater than 0.10%. Now, the index construction, this is the most bullish aspect about this ETF if you ask me. The eligible securities are ranked on 4 fundamental base characteristics, and the 4 rankings are equal weighted to create a composite score. 4 securities with high composite scores. The security with a higher indicated dividend yield is ranked higher. The eligible securities are ranked based on composite score. So first, free cash flow to total debt. Annual net cash flow from operating activities divided by total debt. Companies with 0 total debt are ranked first. Also, return on equity, annual net income divided by total shareholder equity. Next, IAD yield, and of course 5-year dividend growth rate explained as this formula right here. Now it then goes into constituent selection. Select the top 400 securities based on rankings of the composite score. Select securities whose volatilities are less or equal to the median volatility of the top 400. Current constituents must have volatility less than or equal to 60th percentile volatility of the top 400. The volatility is calculated as 3-year price volatility in USD. Next, the top 100 ranked stocks by the composite score passing the above volatility screen are selected to the index, subject to the following buffer rules that favor current constituents during the annual review. Current constituents that pass the volatility screen remain in the index. Non-constituent stocks that are in an eligible pool are added to the index based on their rankings until the constituents count reaches 100. If 2 non-constituents have the same composite score, the non-constituent with the higher dividend yield will be selected. It then goes and talks about how this is going to be weighted and how not one security can be more than 4% of the index, etc., etc. You get the basic idea, but this is going to be a screen that's going to be extremely thorough and sort of strict on allowing different stocks within it, which I absolutely love as a long-term holder. Now, the reason I sort of want to break down the underlying index that SCHD tracks and the methodology is because that's really at the deepest level what you should be asking yourself if you believe in, if you want exposure to. Of course, SCHD has a 3.5% more or less trailing 12-month dividend yield that has been going up and up and up historically. There's many other reasons to buy into this ETF other than just the fact that the methodology is bulletproof if you ask me. I mean, not to mention the fact that this ETF has an average annual total return with dividends reinvested over time over the last almost 13 years of around 13% year after year after year, offering investors a nice starting yield from day one, massive upside as far as growth, and also dividend growth historically. But honestly, if someone came to me as of today and asked me, is this ETF a buying opportunity where it's trading as of currently, knowing that this ETF is basically trading or hovering around all-time highs, I personally would refer them to the Dow Jones US Dividend 100 Index and tell them to look through the methodology and ask them, do you believe in the methodology, the underlying strategy of this ETF, and do you think it's going to hold up long term? Because honestly, over the long term, that's most likely what's going to matter. And because of the underlying index methodology, there's constantly been high quality top 10 holdings in SCHD historically that of course have grown over time, have been paying dividends for a long time, 10 years plus of course, but also been paying dividends and more in dividends over time. Not to mention, side note, just looking at this top 10 list as of right now, I can visually see multiple of these names that have raised their dividends just as of recently as of filming this video. So is SCHD, is the Schwab US Dividend Equity ETF a buying opportunity in late 2024 or early 2025? If you're a long-term holder and if you believe in the underlying methodology, then 100% I would say yes. But if for whatever reason you read through the underlying objective of SCHD and what this ETF basically tracks and you don't necessarily feel like it aligns with what you're looking for, well then maybe it's not the best investment as of right now where it sits. So now that we broke down SCHD and I explained why I personally still believe in it long term and why I've been buying it for several years now, and on top of that, the fact that I still think this ETF is a buying opportunity as of today, I want to hear from you guys down below. As of right now, where the Schwab US Dividend Equity ETF is trading, again, near all-time highs, are you still currently buying this one? Yes or no? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.